Hi, everyone. Welcome to Control and Compound. I'm super excited about the podcast this week. We've got Daniel Foch. He is I don't want to say genius. He's a very smart man who talks about real estate, industry trends, talks about the economy. He hosts the number one podcast in Canada called the Canadian Real Estate Investor Podcast. He's co host of that. And we're going to pick his brain on real estate, the economy, and where things are headed. Okay. Daniel Foch, how you doing today?
I'm good. Yeah, happy to be here. I'm excited for this conversation. I will just caveat that we're the number one real estate podcast in Canada, not the number one podcast in Canada yet.
Oh, I thought
But
it was you and then Joe Rogan, and then
yeah,
so
something like
I
that.
had in my notes real estate.
Yeah, that's next year. That's next year.
That's cool. So I was able to meet you in person last month at a real estate event in Ontario. That was pretty cool, and I heard you speak, and I said to one of my marketing people, I'm like, "Holy crap, that guy's smart. We gotta get him on the podcast."
Yeah, well, thanks. I appreciate it. It means a lot coming from you.
I read a little bit about you. So you were born into real estate. You were born into a real estate family. Mom and dad involved in the real estate world. How did you get to be where you are today? What's your brief history, your journey that got you to be co-host of the number one real estate podcast?
Yeah, it's interesting. I never wanted to be in real estate actually when I was growing up, because I saw the lifestyle of people in the real estate sales space, and I just didn't think that was something that I wanted for myself. And I was working like in the agricultural industry. I was a farmhand, and probably would have done that for the rest of my life. The farm that I was working on got hit by a tornado. This is all a true story. It sounds like fiction, but it's not. And so I lost my job and also my house because I was living on the farm. And then around the same time I got conscripted to the Swiss Army because I'm a Swiss citizen. And so I went there, and I stayed there for a little bit and did some hikes in the mountains and whatever, and ended up getting honorably discharged because I didn't speak their language, among other reasons. But I think that whole combined experience, like that, the being distanced from it and whatever, and seeing a lot of these people, like in a country in Switzerland, like probably considered the most first world place in the world, a lot of people kind of going through this manual labor experience because they sort of like they recently had a referendum and they voted to keep the military thing. And the big reason is because it kind of like helps graduate this youth into adulthood. And so, yeah, I was like with bankers and lawyers and all of these other young people who were training for great careers that had never done manual labor in their life. And here I was like, wanting to do manual labor for the rest of my life. So anyway, I kind of had a change of heart after that experience. And I decided to like, I knew I was interested in real estate, but I just didn't like it because it was what my parents did. So ended up enrolling in an undergrad, a BCom in real estate at the University of Guelph. Did the co-op program because I couldn't focus in school, so I needed the work experience element to get me through it. That was great. Had a little bit of a round trip through the industry, and started selling real estate for a long time. COVID happened. Started making videos online because I had nothing better to do, like a lot of other people. I guess people liked what I had to say, so kind of just gradually started compounding, you might say, and 5 years later, 4 years later, myself and a co-host run Canada's number one real estate podcast. I get that's the quickest summary I could come up with.
I I heard about you going to the Swiss Army, and we had a friend in university, still a good friend of mine now, Steve, and he was born in France and moved to Canada when he was a kid. Like his parents were Canadian, they just were over there for a work term, and that was always the joke at university. Every time he got drunk, we were going to put him on a plane, send him to France, and he was going to come back in 2 years, really mad, but it was going to be a funny story. Um, so when you started making videos during COVID, like obviously you didn't get your knowledge just by taking a university degree at Guelph back in the day. Like, how did you learn all this stuff when you talk about the central banking system, the GDP, the population, the trends, and all your charts and graphs? Like, obviously, you've invested in yourself to learn all this stuff. Where did you learn this stuff?
Yeah, it's interesting. I read a lot and I consume a lot of audiobooks. And then like people can kind of actively see me like searching for knowledge online. So like I just started like a big part of making content was me just documenting that process. Like my first video series on YouTube was me just interviewing people from various industries to ask like how the pandemic had impacted their industry. Like that was all it was. And that was like, and it just, I've always just had this like, and then I realized like, wow, you can make a platform out of this. Like, at least 100 other people want to listen to this story. So I started, I started obviously like really ramping up on it. And I think I was doing like a video a day at that point during COVID because like there was literally nothing else to do. So making content is probably the primary way I get most of my information. It's like I have to research it to
Mm.
I try and take complex concepts and distill them down, and I really just listen to the audience. Like if people have a question, I either answer it immediately if I know the answer, or I find the answer for them, and so that's really been helpful. And I think a lot of people in our industry, like in financial services, people making content, et cetera, they forget that like if somebody asks you something, you have at least one viewer for that piece of content, right? So maybe there's 10 other ones or 100 other ones out there. So just make the piece of content and then move on to whatever else you were going to do, right?
Yeah, it's like you want to be a master at something, teach it. And if you're going on a podcast to talk about it, Christine and I do this all the time. It's like, holy crap, we better learn this. We better learn this before we talk about it on a podcast next week. So it forces you to take the time and be a master, so you can present it. Uh, okay, so I want to get into some of the market discussions about where the real estate market's going, where the economy is going, because I love your take on this. It's not too academic like a professor that no one's going to understand. But I like just the common sense, logical approach you have to some of this stuff. So I want to first start with timing of the market. Now I hear people tell me they're going to time the market all the time. Now they don't use those words. What they
Mm-hmm.
say is, "I'm going to wait until." I'm going to wait until prices do this, or I'm going to wait until interest rates do that. You're a very analytical guy. Been in the real estate business a lot of years. What's your take on individuals timing the market?
I mean, I think that like timing of anything, timing rates, like with the example you just gave me, that's somebody timing rates, not even the market, which is even more complex than timing the market. Timing prices is one thing, like it's consumer sentiment, but timing rates is like a whole bunch of other things. It's rate desks, it's bond yields, it's geopolitics, it's inflation. It's a very complex equation to try and time interest rates as an example. The question I would have for somebody who feels that way is, have you actually done the math? Because if they have, then that's fine. Like they've done some sort of cost benefit analysis um, on if it actually makes sense for them to wait. But like assume that the correlation that we had with interest rates and house prices holds, where they went up a lot and then house prices came down a lot. If rates come down a lot, you would assume that there would be more demand and house prices could go up again. What rise in house prices correlates to a 100 basis point increase in your mortgage rate, right? What decrease in house prices correlates to you buying at today's rate? Like most people don't know the answer to that question. And so I would say, like, if you think about it in purely quantitative terms, um, you can usually model out whether or not there's actual or an actual business case for waiting. So most people just haven't done that math, and it varies on a person by person basis. If you're in your parents' basement and you're paying no rent, then there's no sunk cost, there's no opportunity cost of capital for you to wait, and that's rent that you're paying that you could be putting towards a down payment or investing in something else that's earning you a return or whatever. That's very different than somebody who's renting maybe and might have that be in a hurry to get out of that opportunity cost and get into a savings vehicle of a house, because like that's kind of the way I interpret houses. So yeah, that would be my thought, is like, and then I guess if you're actually to ask what I think is going to happen, I think at a certain point the government is going to have to realize that um, even though they're propping up GDP with immigration or population growth, I mean, permanent residence is the immigration side. Net non-permanent residents, temporary foreign workers is sort of just pure population growth on top of that. Um, that's our GDP seems to be growing, but it's growing at a much lower rate the population is growing, and so on a per capita basis, Canadians are getting poorer, and
Yeah,
so
we're in a recession if you account for population growth. Like
yeah, I
we
mean,
have
yeah,
those
have
negative
been for a
quarters, or
while.
productivity's shrinking compared to the U.S. Like
Yeah,
it's not all
yeah,
roses.
yeah. Our productivity is shrinking compared to pretty much everywhere now. I mean, I think we're on track to be one of the poorest per capita countries in the OECD within the decade, right? So um, yeah, like I think at a certain point, the central banks are going to have to say this is a mess. Canadians are suffering, and um, we have to drop rates. The problem is that they're sort of battling fiscal policy that seems intent on creating more and more inflation, at least until the next election, probably, because they're just going to keep trying to spend their way to maybe win the election, right? Make people happy. So rates will come down
Yeah.
at some point. A lot of people think by the end of the year. I would probably say that that's true. I don't think they're going to come down as materially as most people want them to. And I think that people wishing for interest rates to come down also need to realize that rates typically come down in response to a recession. So be careful what you wish for.
Yeah. Okay, so you reference government policy there, and I want to dig into a couple different government policies, both provincially, municipally, and federally, and kind of get your take on it, because I find oftentimes government policies come in with one intention, and in their actual the actual result is something completely different than what they intended.
Mm-hmm.
We want more units out there. We want more people investing in rental properties. We want investors to put money into it. But if we go through a list here and we start with the Landlord Tenant Board in Ontario,
Sure.
uh, how do you think that affects the number of units, the number of available units, the rents that individuals are paying long term? Is that accomplishing what it was set out to do, or is that hindering growth in the industry?
Yeah. So the landlord and tenant board protects existing tenants. It doesn't really protect new tenants, right? So um, rent control. I mean, rent control is effectively vacancy decontrol, right? So they can't, in Calgary or in Alberta or in the prairies like Calgary or Alberta and Saskatchewan, you could if you could raise rent to the point where a tenant could leave. If a unit's newer than 2018 in Ontario, you could still do that, right? So rent control doesn't apply to units built after 2018. Um, but the landlord and tenant board is interesting because it just adds another layer of hoarding, like how the hoarding of housing that can be added or that can take away from existing supply. So there in a couple of ways. So if as an example, you've been renting a house for 20 years and it's only been indexed at inflation or increased at inflation, you're probably paying 50% of market rent, if not less. And so you have no financial incentive to leave that unit, and you can hoard that unit. You could be maybe somebody who has more bedrooms than you need or has more square footage than you need now. And this is not uncommon. And we hear all this talk about baby boomers hoarding housing that could be sold to the millennial generation, and how they all have 3 extra bedrooms or bedrooms, surplus square footage. Well, the same thing can exist because of this policy in the rental space. And it does exist in the rental space. And you see this in cities like New York as an example. So it's great for the tenant who's in the unit because they get to keep it at a cheap rate because there's a limit to how quickly the rent can be increased. But it sucks for a new tenant who might be waiting for said unit and willing to pay market rent for that unit. So that's where there's a little bit of a negative externality on rent control. The other piece is like otherwise, if you don't pay your rent, if all of these, whatever takes place, the landlord and tenant board in Ontario is relatively fair. Like it doesn't give unfair results. The unfairness comes from it's just another negative externality, or probably just an indication of how oversubscribed our housing market is the wait times, right? Like I think I have the longest. I haven't found anybody who has a longer eviction process, but we had a 16-month eviction, and it happened at the beginning of COVID, or like the actual the sheriff was supposed to show up the day that they did the lockdown. I think it was April 8th or something like that. That was when they that caused an extra 6-month delay, but it still was 10 months, right? Without that. And and that was a unit that was a threat to safety of all the other people in the house. There was regular illegal activity at the unit. Um, the uh, the tenant in the unit was committing welfare fraud and subleasing the unit while collecting welfare and not paying the rent with the welfare. This is just an example. I'm not saying this to complain or anything, but it's just an example of like how. And so during that 16-month period, that unit was generating no income for the owner, um, and it was causing negative externality. And it was actually being reletted to the market on a per bedroom basis to people in sort of this, I guess, like a pretty like sketchy rooming house scenario, obviously. That and so to me, that's like a very good example of the economic waste that would be an extreme scenario, but that's an example of the economic waste that can take place when we had many people. Like there were people I remember during that period of time who were moving out of the city because it was the beginning of the pandemic, saying, "Oh, are you guys ever gonna, like, everyone in the neighborhood knew about this house? Are you guys ever gonna vacate that unit? And if so, like my kids would love to live there and move up the street from us because they have a baby on the way or whatever." So like that's a real life example of what happens. So that to me is the problem with the landlord and tenant board in Ontario.
Yeah, I know, Nova Scotia, like during COVID, they came in with a 2% rent control. Costs went
Yeah,
up. And I was like, okay, that's great that the government wants to cap rates, but why are they asking landlords to subsidize them? Because
right.
you had landlords that interest or mortgage or sorry, insurance costs were going up at 40%. Their heating costs were everything was going up, and they weren't allowed to increase the rent, so they were at a loss, and they were basically forced to take a loss so the government could look good to say we've capped we capped rent increases. Okay, so the next one I want to talk about is now in Toronto and Mississauga and a few of the places in the GTA, they've banned in Halifax, Montreal, Vancouver. They've banned Airbnb, so I assume the rental problem is completely fixed now in Ontario since they banned Airbnbs. Everything's good. There's all kinds of extra units. Everything worked out.
Yeah, exactly. That was enough supply to solve the entire housing crisis right there. Between that and the vacant homes, I guess they
Oh yeah, the vacant homes one.
yeah.
Okay, and then the other new one that came out recently is the flipping tax in BC.
Yeah.
So have you spent any time digging into that and thought about the what's really going to happen, despite what government is saying is going to happen?
Yeah, so I don't like. I think a lot of these things just don't necessarily have the impact that they're hoping. Like, I think they're really more revenue generation tools than dissuasion tools. I mean, the foreign home ownership, foreign buyers tax in BC and Ontario are great examples as well. I think that I think that the government's on the right track with a lot of these things. Like they're incremental changes. They're just way too late, right? Like this is just too like they're all too little and they're just way too late. Like had you done a lot of these things before zero interest rate policy, right? Before we were in an environment of major speculation and basically to a point where interest rates were net, your borrowing cost was negative against inflation, and so people were just levering up and buying anything to put their money in. Maybe it would have had an impact, but I think now, like it's so far gone, the housing situation in this country. Like I don't think that anybody really grasps how far offside we are. At least policymakers certainly do not. And otherwise, they would not be doing, like Airbnbs. Let's say, because you brought that up as an example, or like the vacant homes tax. Like I mean, they're getting like 3,000 units here. The federal government seems to think it's like 30,000 units on a national basis, or like hundreds of thousands of units on a national basis. They're not all entering the housing stock. And so this is where you kind of end up with like a little bit of um, a system that like where they can't move the needle enough. What one would assume the only place they can move the needle enough is demand side, like slowing population growth. But that has its own consequences with probably like the longevity of our pension system, the lack of growth in our economy. I mean, I think the Canadian economy would implode if we didn't have 3% population growth, to be honest with you. I mean, our GDP's fall, like per capita we discussed earlier, is falling so massively that without that, I think we would be in a really, really rough situation.
Okay, you talked about interest rates. You referenced interest rates there. So the $1 million question everybody wants to know. where do you see? Everyone thinks interest rates are gonna decrease by the end of the year. Maybe by the summer start coming down. By the end of the year, be lower. But what's the new normal gonna be? Like we're not gonna get back to where it was. Where do you see like in 2, 3, 4, 5 years, sort of settling out, or do you see a settling out? Do you think we'll get back to where we were?
Yeah, I think you will get to the point where you'll have at a certain point, um, they would have to be real positive interest rates. So adjusted for inflation, like if you're doing the math, for those listening, take your interest rate, like your effective interest rate that you're actually going to borrow at, not whatever the Bank of Canada's overnight rate is or whatever, and subtract inflation from that, and um, as long as that number is positive, I think you're in a responsible financial environment, where they're where like the hypothetical most responsible financial decision you can do is to save money or invest it wisely rather than like just lever up and take on as much debt as you possibly can, which is what is like hypothetically, if inflation is massively, if inflation is 8% and you can borrow money at 2%, you should go max out your credit cards and buy TVs or whatever. Not actually, but like hypothetically, right? So I would expect, like, I think it wouldn't surprise me if the Canadian Central Bank and clearly the Canadian government is comfortable with inflation running a little hot. I think the Bank of Canada is probably pretty frustrated with the government right now. I probably would be if I was Tiff. They're not making his job easy. And so I think we'll probably see inflation in kind of like that 2.5 to 4. I don't think we'll ever see like low twos for the next like 5 years. And then, unless we see like extreme deflation, which would, some major international catalyst, maybe China's economy melting down a little bit. But let's set that one aside. I think inflation tracks in like kind of the 2.5 to 3.5, maybe 4% range for the next 2, 3 years. I think rates are always going to sort of sit like 100 bips higher than that. So if inflation rebounds a little bit, bond yields are going to have to trend back up, and eventually the Bank of Canada will start having to play with policy rates. Like, you see this happen. You saw it in the 70s, you saw it in the 80s, you saw it in the 90s, where they come back and they overshoot it on the way down and have to, bounce around a little bit on the way back down. But I think the era of like, I think a lot of people think, oh, rates are going to come back down to the, get a mortgage at in the 1 or 2 range. Like, I would be surprised if you see that for the next 10 years. It'd be very, if rates are ever as low as they just were, like they were during the pandemic, you would need another pandemic or something, like. And so again, just similar to the recession thing, it's like, be careful what you wish for. I think we got far bigger problems to worry about if rates are back in the ones or twos.
Yeah. Well, I don't see how inflation can get down that low with, we talked about a decrease in productivity. We talked about rampant government spending, but then the price of energy too, right? Like I, 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 I don't see energy dropping in price over the next 10 and 20 years. We're still going to need to use fossil fuels, and no one seems to be making them anymore. Um, that's got to have long-term implications on inflation as well.
I would assume so. I mean, I think that there's like geopolitical factors as well, onshoring, war in like most major continental areas. Like, there's a lot of inflationary factors beyond just monetary policy, like that are outside of the scope of what monetary policy can fix. So I would agree with you. Like, I think excluding the fact that our economy is running incredibly hot from like lingering monetary policy, and like still trying to sober up from that, and the house, like, having the highest household indebtedness we've ever had. Um, we also have that population growth at 3+% per year, and we have all these geopolitical factors. I agree with you. Like, I don't see a world in which inflation can come back down meaningfully to the range that they want it to be in.
Okay, so you got your pulse on the real estate market in Ontario, but I think across the country you got a pretty good take on what's going on. So we definitely see some softening in the GTA, and Calgary's been hot the last couple of years. Where do you see housing going from a in the next few years? Where do you see housing going in Canada? Are we waiting for interest rates to drop and then we're going to see a spike, or is it going to be region specific? What do you see coming?
I think what we'll see is likely, like, what'll look like a sideways market when you look back at it over, and similar to like the 1990s. Like we already saw the big drop, right? Other than Calgary, like most markets in Canada corrected by about you know over like 20%. Let's say Ontario, like some areas in Ontario, came down 30% off that peak. You saw the same thing take place in 1989. House prices dropped until 1994. I mean, we're kind of already on that. Like on a year-over-year basis, house prices aren't really going up or down. And so if you adjust that for inflation, they're going down, right? If inflation's at 3%. So 90 in the 1990s, from like if you look at nominal house prices, so just without adjusting for inflation, house prices peaked at like 300,000 in 1989. In order to get back to that nominal peak, it took till 2002, so like 13 years. You adjust it
Wow.
for inflation, it took till like 2012, so like 20 something years. That's the same setup, right? Like all the factors were similar. You had a huge spike in immigration. The last year we set an or not immigration, but population growth record, was 1.81%. First time we ever broke that was 1.84% 2 years ago, or last year, sorry, beginning of last year. And what happened after that, you saw immigration, like PR, permanent residence immigration, stayed the same, but non-permanent residents fell off a cliff, right? Nobody was moving to Canada because there were no jobs. There's no economic growth. It was made more sense for them to stay where they were. If we see the same thing take place, if you start to see a huge contraction in non-permanent residents in Canada, I mean, it's kind of a lookout below scenario from my perspective. Like people are like, oh, you could never see a 90s style recession again in Canada. It was so bad. It's like, I don't know, honestly, like the bigger they are, the harder they fall kind of thing, right?
Wow. Okay. So with that in mind, for the real estate investors, it's been a pretty good run the last 10, 15 years, right? You buy something and it goes up. What advice would you give the real estate investor today? Going forward from this point forward, how are things going to be different, and what kind of areas do you think are going to be opportunities for growth and opportunities to make money? Buying the traditional family home in the GTA that's cash flow positive right from the get goes, those days are gone. What where do you see the growth for investors?
There's this book, like an old book called The Science of Getting Rich. I'm not sure if you know it, by Wallace D. Waddles. It's a quick read, like maybe a couple hours. You could sit down and digest it. It's like it's in the public domain as well because it's such an old book. You could get it for free, download it in PDF online, um, and it's basically like nothing groundbreaking, but it came out at a time when it was groundbreaking, and it's you have to give more in cash value than you, or give more value than you take in cash, right? And so, in any business, this is the same thing. Create value, and you'll be able to continue to attract customers. I mean, Amazon's a really good example. Amazon never spent any money on marketing when they were at the beginning. They just gave free shipping because they were like, can we make our offer so good that people will have to tell their friends about it, right? And then they didn't have to spend any money on marketing. So, how do we apply this to real estate investing? Well, same advice I would have given somebody 10 years ago, by the way, and I probably could have made a lot more money in the bull run if I was a little bit less honest. But focus on yield, right? Like if you're buying the people who didn't follow fundamentals, who strayed from the path, got killed over the last couple of years. Maybe a couple of them, like before that, made a ton of money being idiots, but they took on a lot of risk, and far more people lost a lot of money than people who made a lot of money. In quick bucks, right? So if you focus on yield and focus on housing creation, like let's really think about the big need that Canada has right now, like the big trend market thesis, you could call it, in the Canadian real estate space. We need houses, right? That's what most of the conversation has been about. It's all the entire political dialogue right now. So if you can create housing, and the government is telling you to do this, by the way, like the government's basically going around, the federal government is going around convincing or giving infrastructure money to any municipality that upzones their entire municipality, basically. So in Toronto, they just upzoned to 4 units. You saw similar things taking place in like London, Ontario. BC just went to 4 units, 5 units. So, and when we talk about like where the economy is actually going, if Canadians are getting poorer, it means they're spending less money on housing. Relative wealth is increasing, and we're not getting more houses. We're not getting as many houses as we're getting people. So what does that mean? Well, it means that more people consolidate into the existing housing supply, or like we see tent cities and stuff like that. But that's a different conversation. But in assuming everybody gets a roof over their head, more people have to consolidate into fewer houses. So what does this materialize in? It materializes in roommates being the fastest growing household type in Canada, right? So co-living is a good example of an investment thesis. You're getting government incentives for people to add units to their houses, multi-generational living incentive from the government, upzoning incentives from municipalities, right? People who are developing 5+ units or have access to basically the cheapest mortgages, highest loan to value, longest amortizations in the country through CMHC's MLI Select program, which they just put $20 billion into. So the government has made it very clear that their policy is housing creation, and they're expecting people with capital to do that. So don't ignore them, regardless of what you think of the government. Everybody wants to get theirs from the government. Nobody really feels like they got their money's worth from paying taxes. So at least capitalize on the policies that they create for you to make money. And that's the big way to succeed as an investor. And fortunately, it's also a way to create some social value in today's world.
Okay, so I just missed your 5 day challenge. I love that. I was on your website realist.ca. Is that it? realist.ca. So the 5 day challenge is over, but I'm curious, what was the 5 day challenge and how'd it go?
Yeah, so the 5 day challenge was us. So we run a course, like it's a pretty high ticket course, like where it's basically just coaching, group coaching, one-on-one coaching, helping people invest in real estate. And so through that process, we learned like what's the biggest obstruction with most people becoming real estate investors, and the answer is typically analysis paralysis. We found that was the biggest. Like we've surveyed a lot of people, and a lot of people would say, I just think too much about it. Right. Like, and I just end up not doing anything because I'm analyzing it so much. And it's a big capital risk. Like buying real estate is a big capital risk for the average person. So we said, okay, well, how do we turn that into like almost a flywheel, right? Where analysis is a good thing. So we just said, okay, the goal for the week is to analyze as many deals as humanly possible. And so we built this almost like funnel system, right? So it's like, let's say you have the entire universe of hundreds of deals in Canada or thousands of deals in Canada. What would be the first layer of analysis that you would use to sort for the best deals? And you can't be calculating the net income on every single one to do that. So we used GRM, the gross rent multiplier, to sort on a gross basis. And then you would kind of sort your spreadsheet and take the top 10, maybe 10%. And then on those, you would just use, or you would backfill for the taxes, the maintenance, the insurance, and come up with a net operating income, and then divide the net operating income by the purchase price and calculate a cap rate, and then sort the list again. And then you would go another layer deeper, because right now the bank is really the one who decides whether or not you can buy a property, and they do that using a debt service coverage ratio. So you would calculate the debt service coverage ratio to see if it would even meet your lender's criteria, because if it doesn't, there's no point in pursuing the deal, or you know what price at which you have to do it. So anyway, each day we had a different metric where we got people to calculate, and by the end of the week, you were able to build like a pretty compelling spreadsheet. And everyone kept asking us, oh, can you just link us to the spreadsheet? And I said, no, you have to do the spreadsheet yourself to understand where all of these things, like all of these different variables and levers, so that you can stress test it at the end. So that was the 5 day challenge. It was really good. We had a lot of people in it, I think 150 people in the group. The goal was really to analyze as many deals as possible, to realize that it's not a bad thing, and that basically you can't. Most people, when they say they have analysis paralysis, so they're overanalyzing things, it's not they're overanalyzing it. It's that they're trying to keep fixing the model because the investment doesn't work, and they're trying to make it work. And it's like, you just got to if it's bad, just throw it out. It's okay. You don't, like, the house isn't going to be upset, right? The deal isn't going to be upset with you. But most people, like, they don't want to go and look in the markets where deals actually work, right? So that's kind of a summary of the 5 day challenge. I think it was and by the end, basically everybody had built they've narrowed it down to one deal and sort of built a one pager for that. And we're gonna run that probably on a monthly basis as well. So
Very cool. So I follow you on X and Instagram. I know you're on TikTok. What's the best place to follow you, and what are your handles?
Yeah, so my X, I always want to say Twitter is
I want to say Twitter too. Yeah.
yeah, it's the only one that's different. It's Daniel_Foch. I couldn't still trying to get my handle on that one, but everything else is just Daniel Foch, DanielFoch. If you just Google me, like I'm fortunate enough to have a weird name, so usually easy to find in that way. And then yeah, I try and be active on like every platform just because I really like doing this stuff, creating value and educating people, and so. Yeah, if I'm not on the platform that you wanted me to be on, just let me know too. Send me an email or
Yeah.
whatever. Yeah.
Well, I can tell you your information is fantastic. I love again the common sense education based education you provide. Uh, it's it's not here's a great deal you should buy it. It's actually logical. So I really enjoy following you. I encourage everyone to check Daniel out. All right, that's it for today. Thanks for watching. Thanks for listening. Thanks so much, Daniel. Take care. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.